have volatility in property value. Sometimes up, then it come down. All right. So this is a price cycle. Now price cycle, it goes up, it comes down, it goes up, it comes down, it goes up, and now I think this is the first dot that is going flat, because 0.2% is not that drastic lah. So that's why I say start to consolidate. Okay, so this is the more current one. And when we want to talk about our market characteristics, there's one characteristics particularly in Singapore, because of the demand is so high, and then we cannot have instant supply. So the only policy tool left for the government is cooling measure. There's no way to ramp up supply anymore. Okay, government, I think already told you Tengah is the last piece of land that we can build a new town. That's it already. This is the last piece. After that, we're going to just build in the matured estate and all that. So private property will be the same, right? Okay, so this one we no need to go into lah. This is to tell you the interest rate is going to remain high for a few more months. Okay, so with this kind of backdrop, then we discuss the so-called strategies, the principle, and this is just a reminder that when we discuss a strategy, we need to have that cyclical nature of the market in mind. Meaning, somehow or rather, you think that this property is very expensive. Somehow or rather, the next 3-4 years, prices just continue to drop because of the cyclical movement. Then you say, okay, then this one can buy already, right? Okay, so there's always a chance. I think I wrote in my book, my latest book. Anyway, nobody buy. It's okay. Anyway, because of the new property tax rate, so it make my book obsolete. Okay, so I have no time to renew the book. I think in the book I say something like this. I say you don't have to worry. You may not be able to afford a $1.5 million condo at the age of 35. But by the time you reach 40 or maybe 45, you are able to afford a property that's $4 million. So you'll never know what kind of surprises life can give to you or God can give to you. All right, so I say, okay, Lord, you have to admit that, okay, certain property is beyond your reach. All right, but because of the highly cyclical nature of the real estate market, maybe within 10 years, boom, okay, you can buy something that is beyond your imagination. Okay, first principle is invest in core property. Now, what is the principle behind? The principle behind is you buy into a known quantity. A known quantity, meaning what? Oh, you already know this project. Now, this refers to non-residential property. I already know the performance of this project, right? So when you buy into a known property, the principle is that this is a low-risk approach. So what is the meaning of a low-risk approach? A known property or a core property, the meaning, number one, it is highly tenanted. All right, so the principle is this: even if you buy the whole building, all right. So I know a lot of feedback says that no lah, we don't have customers who can buy the whole building. Then the context can be changed to you buy a strata unit inside. All right, but you know that the whole building is highly tenanted. This is a popular location, right? So the principle is the same, right? So you look at the occupancy rate first. 70 to 80% consider good, right? And when you have a high tenancy rate, it means that your cash flow is stabilized. Now, so if you are talking about one whole building, that means the building owner already start to receive a very good cash flow. That's called stabilize. Stabilize. Now, so usually for a new building, it will take them 2 to 3 years to actually stabilize the cash flow, right? So if you're buying into something like Paya Lebar Square, the Strata office there. Now I'm familiar there because my accountant is there. In fact, next Monday I got to see him. I got to sign some documents because my end of financial year is July, I think. My end of financial year is July. I don't know. I leave it all to my wife. So usually we delay a bit before we submit. So I think I only know that next Monday I need to go and see my accountant. I need to sign some papers. All right. So that's the time where I will go back to Paya Lebar Square again. All right. So now for that building, I really seriously suspect that the whoever is the landlord, the cash flow is very stabilized. So the principle is this that is because it's not new already. Paya Lebar Square is not new anymore, right? So it is relatively low risk. Now even the seller will know that what kind of demand that they will get. They know already, all right? So then if you were to buy that, you already know what kind of tenant you're going to get there already. All right, so mostly smaller companies. All right, so I mean, of course, they are to rent the whole stretch, even though they are strata titled property. But I actually saw one of the startup that tried to engage me. We try to work together. They are payment gateway. And somehow they just wanted my property cost, even though they are doing payment gateway. So they say, hey, Sam, come up to look at the classroom and all that. I think there are 4 units there, one at one corner, the other corner, and all that. Okay, so now so this is just example. Paya Lebar Square is just an example because why at this stage when you go in, still no major renovation needed. Now, second principle is to buy core properties with value-adding strategy. Meaning what? If you are to buy one whole building, like I think 112 Robinson Road has changed hands a few times. It is a very small commercial property. That means office building, right smack in the middle of Caesar Street. So I used to be based there when I was part of a company. All right, so called. I mean, I sold my previous company to this accounting firm, the subsidiary of this accounting firm, So then, therefore, my office is there. So then I remember I said, hey, in my younger days, I came to this building to see my principal, which is known as SISV Services. They were there also, right? So about 7-8 years ago, when I was there, I held night classes there. And okay lah. I mean, you go in, just basically the lift lobby. You go up to 8th floor. Back then, I was at 8th floor. All right. So it's just, I think only two companies. All right. So these are of course small property. So what I'm trying to say is that it may not be core property, but it's already, and it's right smack in the middle of Caesar Street. So they are easily sellable. I think they have changed hand 2 or 3 times, So when people change hand, when the investors come in, they change hand, they come in. Usually, most of the time, they will retrofit the property a little bit, and then so that they can increase the rent. Right? So now, some more. Okay. So, but for larger outfit, then that is the opportunity for the new owner to actually relook at the tenant mix. So all those not performing, high chance they are F&B where you can profit share, and then you ask them to out you go lah. So now this may not be legal in Singapore anymore. because I don't know whether it has been passed into law or not. Because MTI, our Ministry of Trade and Industry, has already commissioned the change, the study, and then the commercial retail tenancy agreement or retail leasing agreement. I think landlord not allowed to profit share. So this one you have to check yourself. Now, so buyout basically just tell them that I compensate you move out before maturity, or maybe after their lease is up, you don't renew them. All right. So if the building that you buy is big enough, then you relocate them. But this is the principle, right? Only principle. I'm not saying that tomorrow you have a deal like that. Now the another important principle is you restructure the lease. Restructure the lease. What's the meaning of restructure the lease? You study the lease itself, the lease structure. Now, what are the tenants' rights against you? Such as, for example, they say that, okay, you're not allowed to have another tenant that is doing the same business as me. Usually, this will be retail. So this